Okay, mic check, mic check. We're back. Welcome to the Mortgage Mayhem podcast, where real estate meets real talk. I'm your humble host, G Money, and today we've got a packed episode with stories that touch the culture, capital, and community. From America's spending habits to ICE controversial raids to a young black woman accepted to 5 Ivy League schools and a $4 billion investment ship from Mexico to the U.S. Today's show is proof that money is moving and so are the headlines. And we also must talk a little bit about Donald Trump and the new cell phone that he's out here talking about. So we'll touch on that. But more importantly, guys, we have a guest today. I am so excited from Salt Lending. It is going to be a great interview. We'll probably get to him right about 1 o'clock. I can't wait to bring him up so he can kind of break down what it is and what it ain't, of Salt Lending. So it should be a fun packed interview. Sean's a great guy. Looking forward to that. But our outline for today's show, we're going to talk about 10 billion difference in Mother's versus Father Day spending, Minnesota right-wing terror plot, Japanese husbands hand over entire paychecks, guys. What are we out here doing? Middle class growth among black men. DC named the loneliest U.S. city. Florida shelf violent immigration protest threats. The Michigan 48-hour landlord repair bill. Elon Musk apologizes to Donald Trump. Southfield Senior accepted to Yale with $4.7 million in scholarships. GM moves productions from Mexico to the U.S. And then we got 4 mortgage hacks. If we could get to those, we will. If not, we'll bring those back the next go around. I think going forward, we're going to just have our show on Tuesdays. Monday's too hectic for me. I just have a ton of stuff that I be having going on Mondays. So Monday's not going to be a good day for me. So we're going to just probably for now go live every Tuesday, have a action-packed show along with someone that we will be interviewing that's a part of the industry that can give you guys the knowledge that you need in order to be out here doing investments the correct way. Okay? All right, so let's get to it. Let me get this out the way first, and then we'll get started.
Finance, with a twist of street smarts, savvy, and a touch of madness. Before we dive in, here's the deal. The Mortgage Mayhem podcast is for informational and entertainment purposes only. We are not attorneys, CPAs, or licensed financial advisors, and nothing you hear on this show should be taken as legal, financial, or investment advice. Always consult a licensed professional before making financial decisions.
All right, we got that past it. Let's give us a little music so we can get this thing started off right. All right, guys, we're back. Let's get into it. Let's bring up our first. Americans spend $10 billion more on Mother's Day than Father's Day. Research shows in the U.S., Mother's Day consistently outpaces Father's Day in consumer spending by a significant margin. In 2024, Americans were expected to spend $33.5 billion on Mother's Day compared to just 22.9 billion on Father's Day. A gap of over 10 billion. Spending pattern data from Insight to Action shows the average person spent about $254 on Mother's Day, while Father's Day spending averaged about $196.23. The celebration of mothers tend to involve a wider range of gifts and experiences, such as flowers, jewelry, brunches, spa treatments, which often come with a high price tag. Why the gap? The spending gap may reflect deeper cultural perceptions. According to the Bethel Weekly Survivor, it could stem from the belief that mothers contribute more to households and family life. Others suggest that fathers are simply easier to shop for, typically receiving less elaborate gifts. A consistent trend, this disparity in spending isn't new. Mother's Day has consistently seen 50% or more in higher spending compared to Father's Day year after year. While both holidays are widely celebrated, Mother's Day continues to dominate when it comes to dollars spent. All right. So, I mean, that just kind of makes sense. I mean, that's to go without saying, I don't know how long this has been a trend, but mothers we just have such a soft spot for them in our hearts where, when we celebrate them because without them, there would be no us. We all know that. Fathers, we're kind of the afterthought, so to speak. Even though we're present, we're doing the things that we're supposed to be doing as men. Holidays is just, it kind of, buys into our alpha dominance, right? Us being alpha males, we don't really expect much. So we say until we don't get much, and then, we be frowned up in the face, so to speak. So I can see where this can be, a thing, and I think it'll continue to be a thing. I was surprised that we were doing 22.9 billion on Father's Day. That's that's shocking to say the least. But you're right. Mother's Day, we're looking at flowers, jewelry, spa treatments, brunches. Fathers, we may get a gift here, a gift there, but that's pretty much the size of it for us. But just to know that both mothers and fathers are being celebrated in upwards of billions of dollars. What can we expect? I think mothers deserve to be celebrated. I think fathers deserve to be celebrated, but mothers is just something about mothers that you can't really compare the two when it comes to what a mother does for the husband, the boyfriends, the children. Or fathers, we do a lot, but I just can't say we do more than mothers in most cases, right? So, although that this is something that I wanted to kind of bring up just to kind of be tongue in cheek, I still believe that to have both folks, mothers and fathers, being celebrated in such a big way is always going to be a good thing. So shout out to all the mothers, fathers. We just had Father's Day this past weekend, which was great. I had a great time, ate good food, received gifts. So this year it wasn't just a blah celebration, so to speak. I think women and mothers and kids are starting to realize that fathers are just as important. So just a good thing, great thing for all that's involved. So let's just keep it moving, right? Let's do this. Let's get back to, let's see. So a right-wing terrorist intended on killing more progressives, Minnesota Democrats, including Governor Tim Walz and Representative Omar. So authorities confirmed that the document found in a fake police SUV used by the suspect contained nearly 70 names, including high-profile Minnesota Democrats such as Governor Tim Walz, Representative Ilhan Omar, Senator Tina Smith, and Attorney General Keith Ellison. The list also targeted abortion providers and pro-abortion right advocates alongside other lawmakers across several states. Both Hartman and Hoffman were explicitly named, confirming that they were deliberate targets in the early morning shootings on June 14th. Brooklyn Park Police Chief Mark Bruley described the suspect, now revealed as Vance Butler, as clearly impersonating a police officer, using a convincing uniform and a vehicle to execute the attack. Governor Walz condemned the violence as politically motivated, noting that manifestos focus on progressive leaders. This is an assault on our values and democracy itself, Walz said in a statement. The revelation of the manifesto has heightened fears of escalating political violence, particularly against progressive figures. Authorities have notified all individuals named in the document and increased security measures. The public is urged to remain vigilant and verify the identity of anyone claiming to be law enforcement. As the manhunt continues, which they found him, the attack has sparked renewed calls for addressing right-wing extremists and protecting elected officials. Anyone with information is asked to contact the Brooklyn Park Police Department. So, like I said, they actually apprehended the guy who did this heinous crime, killed a couple people, officials, state officials, injured a couple state officials, and I think they picked him up yesterday. But this is sad. I get it, but politics is serious, right? Because it kind of touches on your well-being, your livelihood. There's a lot of things involved with, being a politician. And basically what happened here is that the individual that, caused this heinous crime, I guess he had issues with some of the political folks who's not a part of his ilk. And he went about it in a way that's never, the right thing to do. I don't understand how, just because things may not be going your way or you don't agree with somebody's politics, that you become, God and determine that you're going to take someone's life. This was just so unnecessary. I don't care what party, because it doesn't just happen on the Republican side. There's been some things that's happening on the Democratic side too, where they've injured people, shot people. Remember the congressman, I can't remember where he's from, but he was playing softball, and we had some individuals that shot him, almost took his life, which was once again so unnecessary. So I'm just happy to hear that the guy was finally apprehended, and now he has to face justice, and he's going to really understand and figure out that this was something that he didn't have to do. His freedom is about to be taken away from him. More than likely, he's probably going to be there for the rest of his natural life. I think he was 50 plus. So he won't get a chance to enjoy the second half of his life because of stupidity, right? It doesn't take a lot to voice your opinions about someone's politics. You can easily meet with people, talk to people, and share your opinions without doing damage of this nature, right? So we're going to keep our eye on it. It's all over the news. So we'll continue to follow it in hopes that justice will prevail. We'll say prayers for the families and constituents who lost loved ones, friends, and family members. Because at the end of the day, politically motivated violence is just never good for anyone, right? So we'll keep our eye on it. And if something comes back where we need to update you guys, we will do just that. Okay. All right. Let's keep it moving. Where are we at here? All right. 57% of black men reach the middle class or higher as adults, an increase from 38% in 1960. Findings show marital status is a major factor as 70% of married black men are middle class, right? So more than half of black men in America, about 57%, have reached the middle class or higher in their adult years, a significant jump from just 38% back in 1960. Meanwhile, the poverty rate among black men has dropped sharply from 41% in 1960 to just 18% in 2016. These improvements show that many black men are achieving financial stability and upward mobility, aligning with the promise of the American dream. Key influences behind economic mobility while getting a college education and holding a full-time job are major drivers of economic success. Often overlooked institutions also make a big difference. Serving in the U.S. military, being active in black church during youth, and being married all show strong connections to being better financially or having better financial outcomes. For example, military service. 54% of black men who served in the military reached the middle class by midlife, compared to 45% of those who didn't. Religious involvement among those who regularly went to church as young men, 53% reached at least middle class status in their 50s, versus only 43% of those who didn't. Married, nearly 70% of married black men are middle class, while just 20% of those who never married and 44% of divorced men reach that level. The role of personal drive and belief, a strong sense of personal control and self direction, referred to as agency, also appears to be a powerful factor in long term success. Black men who felt that they had control over their lives as teens or young adults in their late 1970s were more likely to thrive financially later on. Specifically, 52% of those with a strong sense of agency made it to the middle class by age 50, compared to only 44% of those who didn't feel the same level of control. Right? I mean, this is just good to know. I don't want to harp on it too much. Like I said, we got an interview coming, so I won't just kind of get bogged down in these different topics. But once again, if you do right, life will be all right. Is the message there, right? If you handle your business, you find your soulmate, you make sure you keep God first, then you will have a life worth living, right? That's what I get from this particular article. You do the right things, and right things will lead you off into the future, right? And to see the things that you're not doing that leads you to not have upward mobility should lead you to pause and think about, some of the things that you've been doing, so you can kind of tighten things up and hopefully, put yourself in a situation to continue to build some kind of generational wealth, right? So we'll definitely keep our eye on that as well. We'll, just kind of talk about it at a later time because I think it's important, to shine a light on that, just to kind of educate, my people, my brothers, younger individuals who may just be starting their lives and really don't understand what they're supposed to be doing. This is a good article, a good information-based article that can, lead to a better understanding of what you should particularly be doing as you grow older, or as you start your life, so to speak. All right. So we'll keep it moving. All right. So the U.S. Chamber of Commerce has identified Washington, D.C. as the loneliest city in America based on a study of one person households, right? Drawing on data from the U.S. Census Bureau, the study reveals a striking statistic. Nearly half, 48.6% of all households in the nation's capital consist of just one person. This high percentage of single person households places DC at the top of the list of American cities grappling with widespread social isolation. While living alone doesn't necessarily mean loneliness, the numbers suggest a broader trend towards solo living that could have implications for mental health and community engagement. Other cities that also made the list of loneliest places include Birmingham, Alabama, St. Louis, Missouri, and Atlanta, all of which reported significant rates of one person households. These urban areas, often characterized by transient populations and sprawling layouts, may lack the tight knit neighborhood structures that help mitigate social isolation. As cities across the U.S. continue to grow and evolve, the study raises important questions about how urban design, economic pressures, and lifestyle preferences contribute to the rise of solitary living and what can be done to foster more connected communities, right? So in that case, I mean, once again, these are areas that's robust. Tons of people. I don't understand why, um, you know, this is an issue, so to speak, because, like I said, these are robust places. These are places that, have, a smorgasbord of people, that you can be dating, trying to figure out, is this person the right person for me? So, in other words, it doesn't really make a whole lot of sense why you should be lonely in these huge areas. I've lived in DC, well, outside of DC, but I've been to DC 100 million times, and restaurants, clubs, you name it. I've done it in DC, and it's just, to me, when I hear this, even Birmingham, St. Louis, Atlanta, these are metropolitan areas, that as a male or as a female, you shouldn't have an issue. I know dating is different nowadays from what I hear. It's just a cesspool of, individuals who are not trying to be, I guess, committed. A lot of game plan is going on. So I get it, but at some point you have to open yourself up. You have to date people to find somebody. You can't just sit in the house hoping that somebody's just gonna come knocking on your door and it's your soulmate. It don't work like that. You got to do some work, right? So if this is one of the lonely cities, I'm just gonna chalk it up as individuals not doing the work, individuals who are being selfish in their own right and not allowing people to get to know them better. which is never a good thing when it comes to dating. You have to open yourself up. You can't be afraid to be hurt. You have to enjoy your one life that you have to live. So in this case right here, I would just say that I think people should get back to the old way of doing things. I think social media and all this access that we have amongst each other. When we was growing up, we didn't have access, so we had to be creative. We had to, we didn't have Instagram and DMs, and we didn't even have emails back then. We had to, come up with creative ways to show the opposite sex that we're interested. And then we had to, make sure we went into overtime to allow them to understand that not only are we interested, that we want to establish relationships with the individuals that we were pursuing back then. So now it's a little different. You got 800 million ways to access an individual. So it's less work now, but because of the tools that we have available to us, but the actual social dynamic of having to actually be in front of someone's face, actually having to do the work of dating, and not knowing everything about a person before you get an opportunity to actually get to know them. We don't have that anymore. You can look on Instagram and pretty much see their whole life. We didn't have any of that. Access was limited, which made it fun to get to know a person, because a person would have to actually expose themselves to you in order for you to get to know them. So I wish times were like that back in the day, but we're no longer in those times. So individuals that still out here dating, I wish you guys luck. But it doesn't seem like it's a big pool of individuals that you can access, even though it is. You're so used to just kind of finding people on Instagram, Facebook, and places of that nature. You don't take time to kind of go out anymore and search for a potential suitor, so to speak. So we'll kind of pause that for right now, because we're getting ready to bring up Sean on here in 1 second. Sean's. I'm just gonna let Sean kind of tell his story when he comes up. But today we're gonna get into SALT lending, guys. I think we did a deep dive on them when we first started doing this show, and people were excited about the potential of crypto lending. I know a lot of people in my circles were extremely excited. Can't wait for this show to kind of go out to the masses. Hold on for a second, guys. I just quenched my thirst there for a second. So this is going to be great. So Sean, he'll be up here in like 1 minute. Then we're going to get into it. Have a lot of great questions for him. And I'm pretty sure he has a lot of great answers. So, once again, like I was telling you guys, this is what I'm here for, to bring individuals like Sean up, who's an expert in his field, right? Hold on, guys. Don't you hate that when your glasses get dirty midstream of you doing something, right? So yeah, Sean should be. I think Sean's here now. Um, as soon as I can actually see his face, then we'll get this thing started. Sean, can you hear me?
Yep.
Okay.
Can you hear me?
Yes. Can you hear me, Sean?
I can. Yeah. I'm not sure how to turn the video back on. That might be on you, but I don't see any buttons to turn the video on, but I can hear you loud and clear. Sound good?
Okay. Let me see if there's a way. Yeah, I can't turn your video on my end, so
Right,
it
hold on.
would
Here we go.
definitely.
There you go.
There you go. How you doing, buddy?
Hey, I'm doing really good. I just got a chance to kind of just sit in and listen to the last 30 minutes of the topics. So some really good topics in there. So I was enjoying
Right,
it.
right,
Doing good. Looking
right,
forward to
right,
chatting with you.
right. We be trying, Sean. Hey, man, let me just kind of give people. I'm gonna let you kind of do your own thing, of course. But I just want to kind of set this off, so to speak. So Sean Owen, crypto leading pioneer and blockchain innovator. Sean is a serial entrepreneurial and industry trailblazer with over 25 years of experience in business operations and a long time Bitcoin advocate since 2011. All right. Sean is a co-founder and CEO of Salt Lending from 2016 to 2018, board member and interim CEO from 2020 to present. Under Sean's leadership, Salt launched the first crypto-backed loans in 2017, raising over 124 million to pioneer collateralized lending against Bitcoin and other digital assets. So for that, let's give Sean a quick round of applause here, folks. And then we're going to get into the actual interview. For whatever reason, my round of applause didn't come on shots.
Golf clap. Slow one.
Yeah, we'll do it. We'll do it on our own. So, Sean, once again, man, thanks for. I know we've been trying to get on here now for a couple of weeks. We've been kind of playing email tag, and we were finally able to kind of lock this in. We were super excited over here on our end. And we're just going to kind of kick it off by kind of giving you a couple background questions. Then we'll talk about the crypto and mortgage industry connection. Then we'll talk about regulations in the future. And then we'll talk about real world impacts and stories that you can bring to the forefront. And then we'll get you out of here. Sounds good?
Yeah, that sounds really good.
Okay.
Ready to go.
So, Sean, just kind of getting it started. Take us back. What first drew you into crypto and blockchain before it became mainstream?
Yeah, so it goes all the way back for me to basically kind of the jump off point would be in 2008. So prior to anything related to Bitcoin, all of my extra time was going into thinking about and studying the future and technology. But really, I was working in brick and mortar restaurants and buildings, and pretty much all of my thesis was from my grandparents on that the only way to make it was to buy real estate, and you just build your wealth and eventually get some extra properties, and everything will be fine if you work hard enough. In 2008, I just bought a second property. Thought I was doing great, and bought like at the worst possible time. Got my veil pulled back, and really thought I maybe don't know nearly as much as I thought I did. Started studying new forms of investment thesis. I'd also just dumped like all my free money into the stock market, so everything was down like an unbelievable amount. It was terrifying. It's the first time in my life I'd actually lived through something like that. And,
Right.
That kind of led down this kind of journey, I think, for many people, watching all the homes around you start to have the foreclosure signs and just like not knowing where the bottom was. As I started looking into things that really opened up a lot of channels that had to do that I hadn't heard before, like with hard money and gold and silver, with politics, things that I never would have like thought about. And that just sent me on a journey wanting to answer the question, well, what is money really? And is there a better way? This got to be a better way. And in that, I got lucky in hearing kind of this intersection on a couple podcasts around technology and money, that some guys were talking about this thing, Bitcoin, and this technology. And this is like before there was really a market price or an exchange rate or anything. And just the simple concept that you could have some type of money like gold or something that was free and open for anybody to participate, that a limited supply and that was censorship resistant, it was pretty much nobody was in control, everybody's in control. That really blew my mind. And in a way that I fell in love with this idea. Like, wouldn't it be cool if there was like meetups and people you could talk about with things where we had the same type of, philosophy. Right. As that evolved, I started going and looking for people and couldn't really find anybody. And so I started kind of going out and advocating, and in fact, created some meetups and just went and jumped in. And finally I found some people to talk about it. And that itself was really fun. But then once the market price started picking up, I tried mining and tried all these other parts of it, really just because I always wanted to learn everything about it. And just to watch it continues to evolve. Over a few years later, I had the first restaurants that were taking Bitcoin as a currency in Colorado. I'd moved, and that was really great because we'd get 10, 15 people together on a Monday. There's nobody there, and everybody would kind of send their Bitcoin around, and there was no fees or anything. And I was still believing it could be a global currency. A little bit after that, it kind of became real clear. We had some technical issues and things to solve for, and people were really looking at it more like a savings account more than anything. Even when people would buy some beer and barbecue or anything else, and send money around, pay for things, everybody would immediately look to go buy back and get more because nobody really wanted to get rid of it. And so that kind of led down this road of trying to get entrepreneurial, wanted to figure out something to do. There was already exchanges. There was already other things. A couple ideas that hadn't been done yet were in property rights, intellectual property, and or payments. But the scaling kind of killed the payment side for a bit, although I still think that long tail, that's where we'll go. And then the idea of salt was really kind of the history around the word salt is that it's used to preserve humanity's wealth. You'd put it on your food, you would save it, you needed it to live, and it would preserve your wealth basically. We thought that was a really good name for the concept of money and maybe a new form of money, going back to the old. And that really just kind of became a passion and has been all along. Now we see a lot of validation in the president and the senators and other people saying never sell your Bitcoin, and things that we believe in are true. The longer version of that would take a long time to talk over all the years, but it's still basically been something that you touched in the last 30 minutes. It's about building generational wealth. How do you do that? You have to save something for later. And as your generation passes on to your next of kin or the future in general, you want to leave it better than you found it. You want to have something left over in the battery. You don't want to have to just always keep starting from scratch. And I think Bitcoin does that better than any other technology that we've ever seen on the planet yet so far. And so what's the bridge to get there? You still have to have tools. You have to have regulation. You have to have a way to access it and spend it and or borrow against it, which is what we do. And that's just been kind of a really long journey now, over I think 15 plus years or something of from start to finish of learning about this and thinking about the technology underpinning it. And that, I owe to the people who were working on it for 30 years before any of us heard about Bitcoin. There were people building technology and thinking about these things for a really long time. So it's an evolution. But yeah, I'm really happy to be here and talk about those things in any way you want to take it.
Yeah, man. It's crazy because I was in the mortgage industry back in 2008 when the bottom dropped out. I was literally working for a bank. And one morning I came, I was the branch manager for the bank. So I pulled up, looking to park in my, normal parking space. And I saw semi-trailer trucks out in front of the building, but I just thought somebody was moving in, right? Walked into my office and it was pandemonium. They literally came and shut our office down on a Monday morning, gave us a severance package and said, don't call us, we'll call you. And that was the end of it. And that's kind of what took me on my journey as well. I was like, what am I going to do? This is my passion. I love it. Yeah. Banks is, capital is frozen up. No lending was being done at that time.
Crazy.
So it was just a mess.
Yeah, it was. Yeah, so we're from the same generation there.
Right, right.
It was wild, wasn't it? It was just something.
Yeah, it was crazy. Yeah. And I was
it set us all on our journeys.
Right. And I was there to watch it come back as well, because it's all I knew to do. So I didn't like try to go get another job. I just kind of stayed in the bay in that space and just suffered for about 4 years, just kind of learning my craft, getting better at my craft. And then when the market turned around, we was right in the right place at the right time. So the pain that we endured was worth it,
Yeah, good
right?
for you.
Yeah. So let me continue. Salt lending, of course, is one of the as far as I know, is one of the first platforms to let people borrow against their crypto. What
Yeah, we were the
problems
first.
were you trying to solve back then when you came up with the concept?
Yeah, so when we were ideating around this idea in 2015, before we really got founded, the problem to solve was you'd go to any bank or institution or lender or even private money and say, "Hey, I'd like to borrow some money. I have XYZ on my my balance sheet. This is what I own. This is what I'm good for. I can sign a personal guarantee. Look at my assets." And if you had Bitcoin on there, people would be like, "What is that?"
Mm-hmm.
And you just couldn't. It was such a hard problem to solve to get people to just understand, hey, we believe this is valuable. We're never going to sell this thing. It's always going to have value. And the uphill battle was people who had just heard it for the first time, especially if they're coming from a banking kind of point of view, and they look at these really enthusiastic people that seem nice, but then they're hearing the news, watch out for the money launderers and the drug people and the crazy libertarians, which was always kind of a false narrative in my mind. But we had like the Silk Road had happened and things like this. So it was a real uphill battle just to get people to believe that we believe this was worth money. And so we spent all this time just trying to solve wouldn't it be cool if you could just lock this up in a contract and mathematically prove escrow and that we have the rights to this thing. And then we could use that as a baseline for collateral, which we now have. But at that point in time, man, it was really, really, really exhausting just trying to educate and talk through,
Right.
because the questions would always come up. Well, what if it goes to zero? And you're like, okay, well, first of all, it's not going to go to zero because we're all going to buy it. If it goes to zero, we're going to buy it. But that was how it started. That was the problem to solve. It's just simply, can we get anybody at the rest of the world to agree? Can we build a market around this where people will use this as property collateral rights, just like you would for anything else? You can do it on a car. I mean, you can actually do it off of just the promise to repay on a credit card, which to me, I think is terrible. I think that's a horrible way of letting anybody have access to money. I think there should always be some kind of over collateralized state because it really changes your paradigm. It changes the way you think about everything. It's a good behavior. It never allows somebody to go all the way into debt. In fact, the whole concept of debt goes from a negative to a positive if you do it right. And that word doesn't have that same connotation when you're lending the right way and you're helping facilitate, but it requires that you have some proof of assets that are behind you and that you have some stake to lose rather than just a promise, a handshake. Right. And so that problem is still actually an educational learning curve today, just not nearly as much.
Right. Okay. That's good stuff, man. A lot of our listeners are real estate investors, right? So can you break down how crypto-backed loans actually work in simpler terms? Is that possible?
Oh yeah. So I reached out to you kind of when we just did a press release and something that we're pretty excited about, where the largest transaction I think to date, where Bitcoin is staked as a extra form of collateral to make a real estate transaction, a hard money transaction, a development of real estate, more palatable and at a cheaper rate. Basically, over collateralized on top of your traditional UCC filings and deeds of trust to kind of say these two together, real estate and Bitcoin, can make for a better transaction for everybody involved. That really kicked off me looking for anything that had the word mortgage or real estate in it. And here we are talking about it. But the easiest way to think about it is if you had a home or a building, piece of land that is physical, like we all know about, and you say, hey, there's a market for this, it's valuable. The bank would say, well, we'll lend you money, but you have to promise to repay. What are all your abilities to repay? what's your credit worthiness. And if you don't, you have to be willing to risk this piece of property until you can repay it. Well, just imagine that if that same piece of property is just a digital piece of property and it's called Bitcoin, you could imagine, I think for the physical analog, a big giant stack of gold bars. As long as it was in a safe and there was a legal contract around it, you could easily look at the home and the piece of property as a pile of gold, two different assets, but they both basically act as the collateral or the risk asset, where you're going to say you have to repay, or and the party wants to maintain that. So of course they don't want to lose it. So they're willing to continue to pay interest on that. Bitcoin is much more liquid than real estate, much more fungible, meaning it's identical. It's a bigger market. It's global. It has not the same constraints. You can't move a piece of real estate. You can't really move a home. Bitcoin is just much more liquid and available. And so on one hand, it makes it far more superior for collateral. On the other hand, it has this ticker price that's moving all the time, which makes the volatility a concept that is more applicable than with real estate. If homes were always having a real-time price ticker, I think most people would lose their mind and freak out, because it would be scary to imagine the value going up and down all the time. Although in reality, if it were to have a liquid market, that is what you would see, and you just get accustomed to realizing that it doesn't really matter until you go to sell. So those two assets are pretty easy to make an analog to. If you just imagine both of those pieces of property worth $1 million each, let's say, and the bank will give you up to 60%, 50% of that in a loan, but no more. And that's their version of keeping excess collateral, right? Some equity value in it. Exact same principle at play in both a Bitcoin loan and a mortgage loan in those two. So I'll stop there and see if that answers it, or if you want to peel into it further.
Yeah, I can kind of piggyback off of that. How is SALT different from traditional lenders or hard money lenders?
Okay. When I think traditional lender, I think of like a bank. Okay. So banks are in a class of their own because they can effectively print money, and they're effectively managed under the comptroller. So they have their own regulation, right? And they have their own ability to get money at a rate that nobody else can. So they also have their own set of rules that they have to follow that are just different than any other type of business. So if you're a bank, you're a bank. If you're not a bank, you're not a bank. And those two are never really mixed. We're definitely not a bank. The same concept is there. If you look at, say, a hard money lender and a bank, they both want to be repaid, and they both need to understand who they're lending money to. And they're both in the business of lending money. That is how they make money. But a hard money lender has to get a much higher annualized return and needs a lot more protection, because they can't print their own money. They can't get that cost of capital down, and they're not under the same regulations. And they're typically shorter term. So I think Bitcoin fits right squarely in the middle of that, because it's safer than hard money, given that you can dispose of the asset much quicker, because liquidity underpinning, that hard asset is much more fungible and liquid. But the rates are still right now disjointed. They shouldn't be as high as they are. Lenders make pretty good money off of Bitcoin loans right now, where I think eventually those rates are going to come much further lower. They are very similar. And so the word traditional, I would say we are now basically traditional also, right? We're state licensed and regulated in all the same ways. In some cases, over-regulated, because you have to apply to multiple different jurisdictional factions, right? So you're making sure, I think everybody in crypto, anybody in Bitcoin has learned that they almost have to be over-regulated. So it's not at all that it's under-regulated, like people used to say. It's the opposite. But they are in essence about the same, just different purpose. But I'd say most of a good chunk of our customers end up using the money they borrow to go build cash flow in real estate. So the two worlds really are ever so much coming closer and closer together. They are a very good match together.
Okay. Hey, I'm in the private money space. So that was another reason why I was so excited about this interview, because my wheels have been churning.
Yeah.
How can I, scale into that space, based off of what I'm already doing? But anyway, can someone use crypto to fund a down payment or even a full real estate deal? And how would that work through SALT lending?
Yeah, absolutely. So let's say that you're already in real estate in this scenario and you're
Mm-hmm.
looking to get maybe another property. I think historically, people who are in the business of real estate are always looking to safely leverage what they have in one asset to get to the next one. You have to start with one property, and then you get over that hurdle rate. And then the next thing you have to do is you have to then work your way with the banks and the credit and your investors and your shoppers for real estate. You have to find the next one. And then you got to make sure you can hold those two down, and then you go to the next and the next, right? And that's pretty traditional. And most of the time it's predicated off of both the equity value of the property being a good value and or that's something that you can increase as you invest into it. But more often than not, you also have to have the real cash flow part of this. And so that's what covers the lending cost of capital. So with a Bitcoin, what we see happen is that people have gone down that route, but they also want to hold something to kind of hedge their bet and or to diversify enough, or they want to be involved with Bitcoin also. And this can go both directions. Somebody could use Bitcoin to get into real estate, or somebody could use real estate to get into Bitcoin. It's a little easier barrier to get into Bitcoin because you're not looking at buying, one property at a time all the way. You can buy $100 or $5 or $5,000 or $1 billion. And so it has a lot less friction to get in on the Bitcoin side. So we usually see people actually come from the Bitcoin side, and then once they've gained a certain amount of net value in their Bitcoin, they'll up their loan to value, meaning they'll borrow a little more cash. They'll take that and buy the home or invest in the real estate deal. And then they'll use the cash offset to pay for the interest. So it's a net benefit to them. And they do the exact same thing. They're just looking at how do I go to the next and the next, except for they'll usually, you could imagine them buying one piece of real estate and then go buying equal amount of Bitcoin and then going back and forth to refinance the two. The real estate transactions are typically longer term on the hard money mezzanine debt into the longer term bank note. That's usually a way they can work the interest rate down to get cheaper capital. Where Bitcoin is usually a shorter duration, people treat it more like a line of credit, but then end up servicing it for a lifetime because they don't want to sell their Bitcoin. And that can teeter-totter back and forth very well together.
Oh, wow.
Does that answer the question? Because I could give you a really simple version, but that's the full-blown side from both angles.
Right. No, I understand completely. With benefits, there's always some risks, right? So what are some of the benefits and risks of using crypto as collateral for real estate deals?
So I'm biased. I'm going to be upfront. I came from a real estate world. I still believe in real estate as the second best thing to Bitcoin. But I think Bitcoin is a better store of value for most people, both because it is easier to get started, right? Nobody can be left behind. It's like anybody could start buying a small amount of Bitcoin any day, and over 5 years they can change their life. Where with real estate, it's a bit of a hurdle to get over that first property. So knowing that bias, that I do lean a little bit towards, I think people would be better served to start with Bitcoin at a lower rate and then work their way into offsetting that with real estate versus waiting to get to real estate and then missing all that time that could have also been appreciating. I would say that those two do work very well together, and it is not that difficult for anybody to get started. The risks, of course, I think we're pretty much in the risk management business from what I told you in the historical view, where I spent 60 to 70% of my time was educating either bankers, regulators, lenders about how we would protect on the downside. You also have to remember that you also need to capture the upside, right? So risk is both sided. If you missed the upside, you also have a risk in that you got left behind to inflation and other forces that are above and outside of your control. And so we look at risk holistically across the entire spectrum. And there's really three ways that people can use the product where they can manage the risk. One, which would be they set when the liquidation is going to happen, meaning they actually are okay if they get liquidated at a 70% loan to value. That's them saying, I'm okay because I really need to protect the dollars. I've borrowed dollars and it's in my real estate. And if anything goes down, I need to keep the real estate and the dollars, and I'll let go of the Bitcoin. That would be a liquidation, which is totally applicable for people who want that. There's a model for that. It's just not applicable for people who don't. Then there's a middle ground, which is you're just servicing margin calls. You're maintaining your collateral. So if the price of your asset in Bitcoin terms goes down, you will continuously give you an extended period of time, as long as it takes for you to make good on that, so you don't get liquidated. Those are the people who are the never sell, right? It's easy to say never sell your Bitcoin, but life is hard, and a lot of times circumstances happen where you might be out of town, or you have a funeral, some life event happens, and you just need some time. Well, lending basically is buying time, if you think about it in simple terms. And so we allow for this middle ground we call stabilization. We let people just pause for the time they need to kind of get back to making their margin calls and going forward. That to us was our first kind of big differentiator in the middle that no other lenders had. And then just recently at a conference, when this airs, it'll be about 2 weeks ago in Las Vegas, Bitcoin Las Vegas conference, we announced a third product, which is the one I've been working on the longest. It's taken a long time to get to that. We call Shield, which is a way for Bitcoin stakers to make a collateralized safe yield to protect other people in the event that we can turn off liquidation altogether, and say, you're kind of buying the premium of just saying, when the life events happen, I don't want to have to like stop what I'm doing, pause, and go make a margin call. I just want to pay up front, and I want the liquidation off the table, because I believe Bitcoin should be there for my generational family 50, 100 years from now, right? And so they've already kind of made up their mind. They're a hodler, as Bitcoiners would call it. They don't want any other outcome other than, I never want to sell my Bitcoin. And across those three products, you can manage all of the risk. That's all of the risk. You just have to know where you're at in the life cycle. And a lot of our clients who I serve end up, because they're looking at real estate and they have lives, they have homes, they're also leveraging this and changing over time from one to the other. Like maybe you start in one camp, and then later on in life, you're in a different bucket. And then at the end of, longer term, you've changed, and you're both the lender and the borrower, and you're kind of doing more complex work. We could service those client privates that way too. But the basics are really one of those three. Right.
Wow. Man, you're over here. I'm just, you just blowing my brains out.
I love talking about this.
Right. So where do you see the intersection of decentralized finance and traditional mortgage lending headed over the next 5 to 10 years?
Yeah, with the mortgage industry, it's something that I would honestly tell you, you are much more of an expert than I am, I'm sure of it, because I spend so much time in the private markets with Bitcoin. And the mortgage industry to me is always a tough one, because I feel like we always continue to move forward. People can always go find a way to get mortgages, but we have these peaks and valleys. We have these ups and downs. Right now, the rates are very high. The markets are somewhat concerning. It's tied to the bonds and the yields, and there's this whole global macro conversation that opens up when we start to talk about it. I think the biggest challenge with mortgages in general is that you're making a long-term commitment on something, so you should plan on holding it the long term. When I was really involved with real estate, I would never buy a piece of real estate unless I thought I would be comfortable buying it and holding it for at least 10 years. After the 2008 experiment, it took me 10 years just to get back my principal. And so I said, never again am I going to think about this as a short-term investment. It's a long-term investment. And that does change the way you think about it. And it's a much more healthy way to look at it. But where I think it's going is that there's clearly a path towards the U.S. government making announcements and rules and regulations. Whether they pass or not and how they get there, of course, could be debated. But the sentiment and I think the intention is that not only Bitcoin, but other types of blockchain technology, crypto, are kind of here to stay. And we've got to find a way to adopt and embrace this. The biggest part of that feels like Bitcoin as collateral and stable coins, which we could get into if your audience is or isn't familiar with that. It's basically a digital dollar that is right now not controlled by a bank, but is backed by bank dollars and or bonds. And the march towards kind of where does that all head with banking taking on the digital form, not just with Zelle and CashPay, but what does that look like if that moves into a world where it's on a blockchain like USDC or Tether? And you can't have one without the other of these conversations, because every country needs to keep printing money. They have to control their fiscal financial policies, and they also don't want to lose control. Nobody wants to be any lower on the totem pole than they have to be. Everybody wants to be
Right.
that reserve currency as much as possible. And yet you have things like Bitcoin that are, in my mind, also challenging what that will be. Right now, I don't think anybody's saying Bitcoin is a currency, but it still has the potential to over the longer horizon. And at this point, it's more a global settlement layer, right? Changes the
Right.
denominator of what you're measuring in, which against real estate, I think is very applicable, right? It's very applicable for people to know kind of where their real value is. So I think that banks are going to be allowed to finally start to move into this world. And if we're looking at the intersection between cryptocurrency, Bitcoin, stable coins, mortgages, I feel like the mortgage part of it is going to be a little slower. The title companies are still used to doing things with deed of trust and notarized copies that you have to have blue ink, and you have to like physically have them at the county, which in a lot of places is rule, right? Like you have to literally go down to office hours and make sure that your record's there. You know, and so there's a big gap between this world where everything's settling instantly on a blockchain and then the title company. I've found that firsthand. Yet there's also tons of productivity we can unlock if we can do that right. And to me, it feels inevitable being a technologist and just thinking about what the conclusions are when these things extrapolate into the future. It's inevitable. Like if it can be done better, faster, cheaper, it will be. The market will always win, even if it's slow, right? And usually slow because of just old systems or things where governments or entities say if it isn't broken, don't fix it. You know, that it's still going to be inevitable because our younger generations, you're talking about Father's Day and Mother's Day, right? All the people coming up today, they're going to have a totally different world than we did when we grew up. Right. Totally.
Absolutely. Absolutely. Well, since we're on the subject, let's talk regulations. What's your take on the evolving U.S. stance towards crypto lending? Is it helpful, harmful? Where are we at? Where are we right now?
If you were just to look at from inception of Bitcoin, let's say, as a timestamp to now and what the regulations been and everything that's changed over X amount of presidencies, I am the most optimistic now than I ever have been. The last administration, I was the most pessimistic, it was the most depressing because it felt like they were trying to ruin my family and everybody else. And it's like, wait a minute, there's a lot of good people here. Like, don't. There's one guy over there that's a fraudster. We're not all fraudsters. You know, like, please. It was kind of scary and depressing. And so, like, I feel like even just the relief of whether it's true or not, what happens, the fact that we aren't in that world is significantly better. And I'm not bringing in politics, what you believe on everything else or not, right? I just think from what is good for the market, what's good for people who want to have a future wealth stored in Bitcoin and or are thinking about anything we're talking about here is they align with that. You know, you need to know that your home is not going to get raided and that you're not going to be treated as a criminal for something you're investing in. That's just off the table. And so that feels really good. And I think I really hope and pray that that will actually come to fruition, that there's not a bait and switch and that we can just kind of have sensible regulations. I think most people want to follow the rules when they make sense. And they want to have rules that do make sense. And I think most people, by and large, are very happy when everybody's following by a set of rules that make sense. It just removes a lot of that chaos and friction or mayhem. And that to me seems like not that far away. It'd be very easy to just kind of accept technology. You know, once you understand what it is, you have to just understand that it's there. Like we've discovered it or invented it, but the fork, people aren't going to start using the fork, even if you outlaw it. Like the fork is not going away. The spoon, not going away. You know, so we should just figure out how to have sensible use of the fork and spoon, right? And that's where we're at with like cryptocurrency is just accept there's a right way and a wrong way to use these things, and let's get everybody on the same page. And I think the outlook looks pretty good. It really does. Let's just hope we can get it all through in a way that people can adopt before you have some change, the pendulum swings, and people start fighting against it. Because a lot of times these things just get wrapped up in political fights that make no sense. They're not good for anybody, and they're really not related to it. It's just like a collateral damage. You know, I think a lot of people in Bitcoin have been collateral damage over the last 10 years.
Right. Absolutely. All right. Just to kind of piggyback off that. So do you think crypto lending can ever be fully mainstream in real estate, or will it somewhat stay a niche, so to speak?
No, I believe it is inevitable that it will be so mainstream that we will no longer even think about it like a genre. It will it will have reshaped every part of everything that anybody's ever done. And it will be the underpinning. Everything will just be done that way. And you will forget about it. Just like with cell phones, we don't really talk a lot about what protocols are happening here and there. The internet, like it's just established for better or worse. It just is there and we've built on top of it. That is what I think is happening. And mortgages, you name it, whether it's built on Bitcoin, other technology or something like it, the fact that you can have a open network that everybody can build upon, that can hold value and transmit value and settle faster than any institutions we've prior used is, to me, is inevitable. That's where it's going. And in fact, the sooner the better, actually. I think it'd be better if everybody kind of figured out how to adopt it sooner.
Right. All right, let's talk about some real world impacts and stories, right? Any memorable or surprising stories where someone used sought lending to close a real estate deal or saved one from falling apart? You got any stories?
Yeah, actually. So, and just aside, you made me think, because I wasn't sure where we were going with it. I always like these stories that kind of like catch me off guard. So I was at the booth. I was walking around in Las Vegas just a couple weeks ago at Bitcoin Las Vegas in 2025. And the guy walks up to me and they're all like, hey, you have to meet this guy. He came down here. He drove in that. And he had like a branded Tesla, had Bitcoin all over it and stuff. And he's like, yeah, check it out. I just bought that. And there's over on the East Coast. I bought it with a salt loan. And I drove all the way across the country in it. And I just wanted to show you. And I was like, oh, man, that's so cool. You know, like that is a really cool use of the funds. Like we wouldn't be able to go advertise for somebody to do that at every dealership, but somebody just came up on their own and figured out a use case to leverage their Bitcoin. And I love those stories. The one we just did with we have a blog out on this. You could look up a company called Golf Suites is building these large entertainment centers where you can go and you can play golf and you can have an event. You can eat pizza. You can be with your family in a community, and it's somewhat like a Dave and Buster's or somewhat like a Top Golf, right? Like where it's a large building and the community is better off having one around somewhere if people like that kind of environment. And what we're really doing is we're demonstrating that staking Bitcoin, meaning locking it up in a way that people can know they're going to have it for later. They're not putting it at risk, but yet we can write the contracts around it to help a traditional, call it hard money lender, get more comfortable because there's this additional group who's bought in to help protect the first 12 months of getting the new location from breaking ground to cash flow. The problem with most hard money is that you need time, right? And so if you misgauge that, you've got to get that time element right to where you have access to capital, get to the launch date, because you never know if it's what kind of, who knows, zoning, administrative, maybe the utilities just are off by 6 months and everything's fine, but the utilities aren't there. Like you just have to have that ability to get it over the finish line. I think that is going to be the big change. And there's going to be all kinds of investments built off of that, whether it's just some of these large influencers and or companies that allow you to invest in real estate in a fractional version that also offset some of that risk and upside with Bitcoin that blended into a package. I think you'll see a lot of that. And I think you'll see a lot of personal people. Like imagine how many times, I mean, in my life, it's pretty much continuously been the case that I always know somebody who's pinched somewhere on, like, they have the best intentions, they're working hard, but some factor has shown up that was outside of what they planned on. And now they just need a bridge. They need a bridge, right? They just need a hand. So they need a community. They need somebody. And that's what banks and communities should be for. But a lot of times we have to like pool together and find ways to do it. It's not very efficient. If we can create the infrastructure based around this global liquidity of Bitcoin staking and this global kind of trend towards, let's say, blockchain and or just technology, because we haven't even started talking about AI and some of the things coming, then we can create a better opportunity for so many more people to get out of poverty and or to allow for a bridge to get to that hand they needed, right, to walk them across. And so there's a lot of stories on that, and I think they're nowhere near as efficient as I would like them to be yet. Like I'm very dissatisfied that we haven't done it sooner, but that's just in my nature to want to go real fast. But I am very proud and happy that it has happened, and there's a lot of use cases, and there will be many more. there will be many more of those great stories where people build generational wealth, and I was somehow in some way able to help them in that.
Yeah, absolutely. I can see it, man. Um, let's kind of talk about the client, right? What advice would you give someone who's sitting on a decent crypto portfolio but unsure how to leverage it? Leverage it for real estate. What would you
Yep.
tell that person?
I think the most important thing, not financial advice or any kind of advice, just my thoughts on this would be,
Right.
don't leverage it until you know for sure how to and why, right? Like this, the principle of saving should always come first, and not saving in dollars, because I think that's bad. Saving in a hard asset, saving in Bitcoin, saving where, if I don't know for sure that I should really take on some extra work, then just take a nap, go to bed, rest on things, sleep on it. Like it'll be okay, because you're actually already sitting on the asset that does the work for you, the battery.
Right.
However,
Right.
if you are inspired and you see some need or want that you really do believe in, and you're ready to go do that, well, then I think the best thing you could do is get access to cash without selling your Bitcoin. That's the entire premise of SALT.
Right.
Is just, how do we be the bridge between buying and selling? If it's binary and you either have to hold and save forever, or you have to sell, you don't have much flexibility. If you can have line of credit in between for as long as needed, then the sky's the limit, as long as you don't get too over excited or zealous. And that's always true with any kind of credit. If you have a credit card that gives you $50,000 and it's promised to repay, and you haven't really thought about it, and you go max out, not a good idea. If you have a $50,000 asset and you can tap into it, you only need $5,000, and you can turn that into another 50. Great idea. And so I think it's just those two principles. Be very cautious to go down a route unless it really aligns with the best version of you and what you really believe in. And then don't risk it until you know that for sure you're willing to commit to it for the next 10, 20, whatever years. So that long-term thinking, I think, is what underpins both of those, step one and step two. But it's very easy to get started at any point in time once you're there. It's not a hard hurdle once you get past that. The hardest part is that very beginning of saving, and then thinking about how not to go get off invested or caught up in the wrong things, right? And still not feel like you're left behind, right? Like nobody wants to feel like they're left behind. And working in a world where everybody's constantly inflating the currency and/or making you feel like you have to go gamble does inherently make an uphill battle for everybody. And it's good to just remember, hey, there's another way out of that. You don't have to do that.
Right. All right. Well, I mean, that's good stuff. Sean. So tell me, what type of borrower is a good fit for SALT lending, and who's not a good fit for SALT lending?
Well, it's an easy one, because there's no real discrimination against anybody other than, do you have ownership of Bitcoin or not? And that like opens the entire conversation to flatten it out. Now, we do extra checks on different products and underwriting standards in different states where it's required. Like, we follow all of the rules that are mandated to make sure we're qualifying the good fit, the KYC and all the rest that you have to do to show that you're not being irresponsible. Right. Once you get past all that, my personal belief is, if you bring it back to simple terms, if you're already owning, say, some number of something valuable, and you can prove that you have it, well, then that is the credit. That is the proof that you have the ability to stake that and put it at risk. Should you? Different conversation. That's the one we just had about knowing your purpose and your intention. But anybody, I think eventually the entire planet should have a Bitcoin savings strategic reserve, just like we're talking about at the federal government and state government. Most of the states now have a bill for them to hold on to some amount of Bitcoin as an asset, just like you would with gold or any other asset. And I think the benefit of where we're at right now in this time is that you can get ahead of that. Any single person can go start with $100 and start buying Bitcoin faster than the big companies can buy it all up. Otherwise, they will. All the countries are going to end up trying to get as much as they can. Every company will and should. It just changes the economic of your balance sheet. And it doesn't have to be in lieu of any other assets like real estate or other. It's just as a vehicle I think everybody's a good fit.
Right. Okay. For our audience who wants to tap into the crypto-backed lending, what's the first steps?
Buy Bitcoin, save it, go to saltlending.com, check us out, get a conversation. We're human, so we're always there. We'll take as much time as you need to be educated. We're very big on disclosure, transparency, building a relationship, making sure there's education, because a lot of this is actually, most of investing in finance is really about knowing that you're picking the winner that you should, and knowing the information and the knowledge that you should have, and being educated, and then being the best you can, right? And so it starts with just learning and having a conversation, and you can start small. It doesn't have to be all at once. It can be over time. Our benefit, I think, is, and one of the things I like about this product is that it's a lifetime relationship. Like, you're looking at a forever thing when you're picking a bank, or you're picking a house, or you're picking some savings, retirement. If you're thinking about this like retirement, it's not a one and done. There's no quick anything. It doesn't have to be overnight. It shouldn't be. It should take as long as it takes to know that you feel comfortable and you have the information you need and that you're on the right path. And so we just help people out on that for as long as it takes, knowing that, we're building a relationship forever with something that you will have hopefully for generations to come, that that gives us that long-term preference on thinking. So it's kind of easy. You can jump in whenever, and you're never really late. Everybody feels like they are. Everybody always wishes they could have bought a house or bought a Bitcoin like a long time ago. Like, how did I do? But the truth is, yeah, me too. Believe it or not, like, it's a hard thing, because we all have that bias to look back and be like, so close. Like, the next one.
Right.
The truth is the next best day to plant the tree is always today, and that'll be true tomorrow. There is no real past or future. It's just what you're doing today. So as long as you're starting somewhere, you'll be just fine.
Okay. So what's next for you and Salt Lending? Anything exciting on the horizon?
Yeah. I mean, the really big one is this staking reserves, right? The ability to prove that there is, in fact, a safe way to earn on being a Bitcoiner without risking it in some kind of sketchiness, and a safe way for this to evolve and bridge into real estate, mortgages, and finance. Like, to me, that is big. I think longer term, next 5+, we're going to see real estate titles, tokenizations, securities, stocks, bonds, you name it, everything, gift points, Pokemon. It's all going to have blockchain ability and trade. Right. However, the thing that is the most established today is just Bitcoin as a savings account, and everything else safely building around that over time when it appears. And so I'm most excited about just seeing where we're at, going from Bitcoin as an adoption of the global settlement and savings account, and all the amazing things that can be built on top of that digital property over time into currency and proof of title and settlement of real estate and everything else. Right now, today, we're mostly focused on just the intersection of real estate and Bitcoin, because I think that is so intuitive, yet hasn't really been fully done, because we couldn't until people would really accept Bitcoin as a store of value, and at the at the level where everybody feels confident. I believe we have passed that now in the last couple of years, for sure. And now it's not. So there's this entire new section of adoption and build out that can happen that was not available up until right now. I think that's really exciting.
Wow. All right. Well, Sean, I'm not going to hold you up, man. Where can people follow you, learn more, and connect with your Salt Lending team? Give the audience kind of the play-by-play on how to reach out to you, how to get involved. I know I'm going to start reaching out to you because I'm triggered now. You triggered me today, Sean, I must say. But yeah, if you could just kind of give them insight on how to get in contact with you guys. I'm definitely going to reach out to you as a person who's a part owner of a private money firm. I'm just thinking as we're talking how we can kind of incorporate ourselves into your business. And I look forward to, talking to you offline and see if that's a possibility. But just the average person who's looking to get involved, what would they need to do? How could they find you?
Yeah, you bet. First of all, thank you very much. The conversation's been great. I look forward to many more. The
Right.
easiest way for SALT is www.saltlending.com. And
Okay.
there's kind of 3 or 4 major kind of avenues you could take from there. You could just jump on and set up an email or a phone call. You can go. I always tell people the safest thing to do, since there's no risk to you, is just get an account, because then you'll kind of get the feel of things. We'll know who you are. We'll be able to start a conversation at any point in time. And that really goes down either a borrower, kind of somebody who's got Bitcoin, wants more Bitcoin, maybe needs a bridge to cash, a lender, somebody who's just looking to have cash, they want more cash, they want cash flow, a private client, which is maybe high net worth, or business institution, or somebody who's looking at something at a larger conversation. Maybe we need to have more of a one-off conversation. Our authorized partners, which is the way for anybody to participate if they believe in what we're doing and want to be a part of it. Maybe you have a podcast, maybe you have a platform, maybe you have something where we can do what I would call in simple terms some kind of revenue share and or integration.
Okay.
I should have said this before, but yeah, the API integrations I'm super excited about. We're reworking our whole webpage. So right now you'd have to probably go through private client and just talk about that. That's our ability to take our whole tools, everything we've been building for all these years, and integrate it into your website and or your product, whether you're a bank or you're just a podcast. We've got kind of a way to connect the dots there.
Oh, wow.
And then for me, I think you can get me there, but you can also find me on Twitter pretty easily and or any other places. Some are easier than others. I would say Twitter is probably the easiest because it's not bogged down like LinkedIn and other places. Sean _ Owen. I got a J at the end. So it's pretty easy to see the one guy that's always talking about Bitcoin assault. But yeah, any of the people are happy to talk. We are always making time to really educate and share information, and email is always a good one too. Sean.owen@saltlending.com is always taking emails. Happy to talk to anybody that found any kind of inspiration or questions here. And yeah, we should talk again.
Yeah, we will, Sean. I promise you that, man. It's been such a pleasure. Thank you for your time. I know it's the only thing that we can't get back. So we really appreciate you coming here. We'll clip this up, get it out on different platforms to just kind of, bring some light to what I think is the future. And if people can kind of get involved now, they don't have to be like us and be like, man, if I would have just, they can kind of see it now and get involved now and not have to wait until later. So we'll definitely get it out on the social media. And then at some point, like if you have some groundbreaking, new thing that you want to talk about, just send me a quick email. We'll bring you back up. And, we can educate the public about what it is that you guys are doing. So thank you very much. I appreciate your time.
It was a pleasure. Thanks for everybody listening. It was really great. We'll share as well. We'll make sure we get it out there and spread the good word.
Okay, buddy. Appreciate you, man. Talk to you soon.
Yep. Let me know. We'll see you. Let me know how I can help. I'll talk to you soon.
Okay. Bye-bye. All right, that was my guy, Sean, man. That was good stuff. I cannot wait to talk to Sean offline. I mean, he said so many dynamic things that, educated me. I'm not a big crypto guy, but trust you me, I want to be. So to be able to kind of get a glimpse into that world, because it's going to be it's the future. I mean, we could try to act like it's not and kind of sort of be left behind, so to speak. But we all see it. It's right in front of our faces on a day-to-day basis. A lot of people have made a lot of money from, crypto. So when I first saw it, I was just like, what? There's a opportunity to lend in that space. So that's why when Sean reached out to me, I was so quick to try to get him on a calendar because I knew it was going to be some gems there. And we'll chop our interview up and kind of get out the gems that's, available to us. But let's kind of keep it going. Once again, thanks, Sean, man. That was great stuff. Hopefully, seen a couple people chime in. Hopefully they were able to kind of get what they needed from him. It's kind of like you don't know, right? It's not something that we're familiar with. So you kind of find yourself on the outside looking in. And here at Mortgage Mayhem, we're going to, try to not allow that to be the case, right? All right, so let's kind of keep it moving because we're going to have to get out of here shortly. And I just wanted to kind of run across a couple other things. All right. Okay, so let's talk about this guy right here. If you know, you know. A Florida sheriff warns immigration protesters that they won't play with them. Says officers will arrest them or kill them, people. We will be notifying your family where to collect your remains at because we will kill you graveyard dead. It looks like things may be getting crazy down in Florida. A sheriff, that guy you see right there, gave a public warning to protesters that plan to come out for the No Kings protest and exercise their rights. The protest is set to happen or it already happened on June 14th across many states. In a press conference held on Thursday, Brevard County Sheriff Wayne Ivey said protesters are allowed to be peaceful, but gave a long list of things that won't be tolerated and what the consequences would be. Ivy says officers will have a response for everything, including running them down on foot or with their cars. If you hit one of us, you're going to the hospital and jail, and most likely get bitten by one of our big, beautiful dogs that we have here. If you throw a brick, a firebomb, or a pointed gun at one of our deputies, we will be notifying your family when to collect your remains because we will kill you graveyard dead, Ivy said. All right, Mr. Ivy, I get it. You're trying to have law and order, but some things don't need to be said. And this is one of them. Nobody needs to hear that. We, as Americans, understand that the police have the right to, use excessive force if you're doing something you're not supposed to be doing. And if you're pointing guns at a police officer or you're trying to run down a police officer, then of course you're going to get, what you probably deserve to get, right? I don't know about death, graveyard death, or, whatever he's talking about, but you should be punished by the crime that you commit, right? And I just think we're in a world of bravado. Everybody wants to be Mr. Big Bad, you know what, until you have to face something, face to face. And, typically the ones who try to run around acting tough are typically the ones who are not tough, right? It's the ones who don't act tough that when circumstances appear, then, they handle their business, right? So this is like one of those cases, sounds like he might be a part of the whole, Trump persona, just acting out, saying whatever you want to say, don't care, don't have any filter or any kind of empathy for anybody. It is what it is. I'm the head sheriff in town. If you don't like what I say, so be it. But if you come out and you do any of these things, we will definitely take care of you. And we will, ship your remains off to your family members, which is diabolical. But anyway, nothing of that sort happened. The protesters went out this past Saturday during the president's birthday and his whole military, whatever the craziness that was. So it was a lot of peaceful protesters all across the country. I didn't see anybody in Florida getting graveyard dead or any of that. So I just think, once again, you get an opportunity, you have the power, you say and do what you want to say and do to make yourself seem tough. And, one that's pretty much, law and order. is how they go about it. Law and order when it's convenient, law and order when it's not convenient, just law and order, law and order. So, we'll keep an eye on the sheriff and see if he creates any other headlines in the near future. All right, let's keep it moving. This was interesting right here. No, not that. No, not that either. New Michigan bill will require landlords to do repairs within 48 hours or renters can withhold rent. I'm a renter here in Michigan, so this was, of course, interesting to me. So Michigan is taking steps to strengthen renters' rights through new legislation. State lawmakers have advanced a set of bills designed to hold landlords more accountable. One key proposal would require landlords to address serious safety issues within 48 hours of being informed. If they fail to do so, renters would be allowed to either withhold their rent or repairs themselves and subtract the cost, or do repairs themselves and subtract the cost from what they owe. Another part of the legislation would be requiring landlords to give tenants at least 90 days notice before increasing rent. These changes are included in what's called the Tenant Empowerment Package, a broader effect to give renters across Michigan more stability and protection. This bill have cleared a Senate committee and will now move to the full Senate for a vote. Look, I'm all for this because I'm just tired of the world of landlords, slumlords, whatever you want to call them, making money, creating generational wealth. The individuals that's in these homes are helping them to do that because they're paying you whatever they're paying you every month. Typically, is straight profit. At least if it's not just straight profit, is at least paying for the mortgage, paying for the utilities. Well, not paying for the utilities because, of course, the people that's living there does that. But at least it's paying for your mortgage every month. And then you're probably walking away with some positive cash flow. So if you're going to have a residential property, people want to live in a place that every time they look up, something is going wrong. They don't want that. I wouldn't want that. Anybody that rents does not want that. So if you're living in a place and your landlord won't come repair your furnace, so you don't have adequate heating or water, whatever the case may be, or it's just, the place needs to be painted or whatever the problem is that has for the past have just gone as though you put in a request and whoever the request is just, in one ear and out the other, and you end up the same problem turns into a bigger problem. And then, a lot of times people have to move out because the problem has just overcome them. So this is a good way to stop some of that madness, right? So we're going to keep our eye on this one for sure. And I think it's a good law. I really do. I think it holds landlords accountable. It makes the tenants, better tenants because the landlords are doing what they're supposed to be doing in order, to maintain that property and give the people that's paying that mortgage or helping you to build generational wealth an opportunity to live in, above decent conditions, right? So we'll keep our eye on that one. I think it's a good law. We'll see if it passes, and if it does, we'll bring it back up and we'll talk more. All right. Okay. So we always highlight someone on here. Southfield senior accepted to Yale awarded $4.7 million in scholarships, right? So Mary Casa, a Southfield senior, has earned $4.7 million in college scholarships and will attend Yale University on a full ride scholarship. Southfield Public Schools announced she was accepted into 5 Ivy League schools. Mary, the daughter of immigrants and first-generation college student, plans to study computer science and hopes to become a machine learning engineer. She was accepted into 5 Ivy League schools: Yale, Princeton, Brown, Columbia, and Cornell, along with other top universities across the country. Among her many accomplishments, Mary received an Amazon Future Engineer Scholarship, which includes a $40,000 award and a guaranteed paid internship with Amazon after her first year in college. Mary began applying for scholarship as early as her sophomore year, ramping up her efforts by the end of her junior year. Her hard work, self-advocacy, and determination helped her overcome barriers and seize opportunities. No matter what your environmental circumstances are, still push yourself to the best of your ability. Rather than feeling discouraged by lack of resources I had at times, I took that as motivation to do more. Thanks to that mindset, I am able to make my dreams a reality and attain what felt impossible, Mary Casa said. So this is Mary Casa. She's just been awarded $4.7 million in scholarships, and she has a full ride to Yale. Let's give a big round of applause to her, because I mean, just face it. How many people gets that kind of opportunity? You know what I'm saying? So thanks to Mary. Much luck. It sounds and looks like you're going to have a great future. Like I said, you don't know me from Adam. Maybe one day you might be online and come past it and see that, people are recognizing you when you don't even know you're being recognized. All right. So that's Mary. All right. Let's keep it moving. All right. So General Motors, I'm bringing this to the forefront because, a lot of people here in Michigan work for General Motors. Both of my parents retired from there. General Motors plan to invest $4 billion to move production from Mexico to 3 plants in Detroit, Kansas, and Tennessee to avoid paying $5 billion a year in tariffs. So General Motors is planning a $4 billion investment to ship vehicle production from Mexico to 3 of its U.S. plants, according to sources who spoke with the Detroit News. One of the plants involved is this previously closed Orion assembly plant near Detroit. Originally set to manufacture electric trucks, the Orion plant is now being reconfigured to produce full-size SUVs and light-duty pickup trucks due to slowing EV demand. Meanwhile, GM's Fairfax facility in Kansas will take on production of the gas-powered Equinox compact SUV, and the Spring Hill plant in Tennessee will begin building a gas-powered Blazer, previously criticized for being produced in Mexico, shortly after the Detroit News reached out to GM for comment on the plan. The company shared the official details on its website. Our vision for the future of transportation is centered on American innovation and manufacturing, GM CEO Mary Barra said. The move shows our commitment to building vehicles here in the U.S. and supporting American jobs. We're all about giving our customers options and delivering the vehicles they want. It sounded like them tariffs got to tariff it, and you guys had to get away from that cheap labor over in Mexico because that cheap labor wasn't going to be $1 billion in loss. is lost because you got to pay people. But I don't think it was going to be, $5 billion in a year. You ain't paying that much to people, especially in Mexico. So I think the play here is tariffs won the day, which is a good thing in this case if this is true. And they're bringing the jobs back to the United States. So that means capable individuals here in the U.S. can go get those good blue collar jobs that can potentially place them into the middle class. So this is good stuff. We'll see how accurate it is. We'll see how much actions will actually take place, but we definitely got our eye on it. Especially being that we're right here in Michigan. So if it breaks, anything actually happens, then we'll come back and actually give them a round of applause, because that just means jobs for, a number of different families all across, the three places in which they're saying they're going to, invest the $4 billion. So we'll keep our eye on it. All right. Last but not least, the Trump organization unveiled a mobile phone plan and a $499 smartphone that is set to launch in September. On Monday, the Trump organization announced a new mobile phone service along with a $499 smartphone, both launching in September. The service, called Trump Mobile, offers a monthly plan priced at $47.45. 47, he's the president. 45, he was the first president. It includes unlimited talk, text, and data, plus extras like roadside assistance and telehealth and pharmacy benefits, according to the official website. They're also releasing a smartphone called T1, which comes in a gold-colored metal casing and features an etched American flag design. All right, so look, I ain't gonna ever be one to be trying to tell somebody how to get money, because that's what capitalists, United States is a capitalist place, so people are gonna forever be, figuring out ways to get money. But the president, come on, bro, you could have let your kids kind of go about doing this, if you, just kind of wanted to be in another lane to get more money. But to me, this just feels, it don't feel right. I don't really know what to call it, because people can make money if they want to make money. If they got a great idea and they can put it together, then so be it. But this just feels kind of, I don't know. The president, I mean, first it was gym shoes, then it was watches, now it's cell phones. It seems like he got a lot more to be doing right now. Tariffs, wars, the economy. It's so much more that could be going, that he could be, and I'm pretty sure he is, for the most part, involved in those things that I just mentioned. But, to kind of drift with cell phone, it was like the last thing I thought I would see coming from a president, to be honest with you. Not to say that this one, because he's always been about the quick this, the quick that gimmick to make money here and make money there. But at this point, I would assume they got enough money to not be doing frivolous businesses like cell phones. I mean, you're late to the party, bro. It's all kind of cell phone carriers. And then you're going to be pretty much like, banking on the already established cell phone companies in order to establish your cell phone company. So I don't like it. I mean, he's free to do whatever he wants to do, but it's bigger issues and problems that he needs to be concentrating on. So we'll keep our eye on it and, report if something comes down the pipe. But I just thought we should bring it up, because I just thought it was funny that this guy is now, doing cell phones. I didn't really understand it. But it is. It's America, so can't be too mad at him, right? So that's pretty much it today, guys. you know, this is the podcast that breaks down money, markets, and mayhem like nobody else. So a big thank you, to our guests from Salt Lending, Sean, um, you know, Sean Owen, who's a crypto lending pioneer and blockchain innovator. So to have him come up, that was big. The conversation was great. So thank him again. And that's Sean Owen over at Salt Lending. So if you like what you've heard, don't forget to share, subscribe, and tap in with us on YouTube, Spotify, and wherever else you get your podcasts. So until next time, start smart, stay bold, and stay financial fearless. Peace. I'm out.